Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is March 13, 2024. It's a quiet day in the market in that there's little in the terms of news, and the markets are acting accordingly. But there are some technical levels still in play for the dollar versus Swiss franc, which it's always best to be aware, be prepared. So that's what I'm going to do in this video. Looking at the 4-hour chart of the dollar versus Swiss franc, there's a number of different levels in play here, including, let's go from the bottom to the top, the 100-day moving average. That's this blue line right here. That level comes in at 0.87524, and trading earlier this week, I guess yesterday, the price fell below that moving average but could not sustain momentum. On Monday, the price fell to that moving average and found support. This green line represents the 200-bar moving average on the 4-hour chart, and on Monday, the price not only tested the 100-day moving average, it tested the 200-bar moving average on the 4-hour chart. It also tested it here before breaking below both it and the 100-day moving average yesterday. But as you can see, the price moved above. So that 200-bar moving average comes in at 0.87620. On the top side, there is the 100-bar moving average on the 4-hour chart. That's this blue line right here. That's up at 0.884046, and the 200-day moving average up here at 0.88257. Also in play on this chart is the 38.2% retracement in the move up from this low right here, which was the February, end of January, early February, I don't know which one, low, to the high price that we saw in the month of February. That level comes in right at the 200-bar moving average on the 4-hour chart level at 0.8762. So where are we? Well, in trading here today, the range is very narrow. We just reached a new session low, and in the process, we're moving closer to that 200-bar moving average and 38.2% retracement at the 0.8762 level. If we were to break below that level and then get below the 100-day moving average, we still think that we think that the bias turns more to the downside. I know yesterday we fell below that level and could not sustain the momentum, but another break below that level at 0.87524 should increase the bearish bias and have traders looking down toward the 50% retracement of that same move to the upside from this low right here to this high right here. Now, going back to last week's trading, the low price on Friday came right down toward that 50% retracement level. It also came down toward the other swing lows right through here, where we had a number of different swing lows formed just near that level, near the 50%, and you can see all those all levels coming in play between 0.8721, 0.87277. So getting below that level on a break below the 100-day moving average would still be a challenge for the sellers. Conversely, as long as the price can remain above the 200-bar moving average at 38.2% retracement, the bias still remains more to the upside. And again, the 100-bar moving average and the 200-day moving average up here would be the next key targets on the top side. So we are mired in a very narrow trading range. We're kind of being lulled to sleep, but it's always best to be aware and be prepared, and that's what this video does for you. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.